Right, hi everyone. Excited for another new stock market update? You should be. It's been another exciting week. Excuse the glasses, excuse the attire. I've been to Legoland with my son all day, so I'm a bit late with the update as well. Anyway, where are we on valuations? Same as always. For a long time now, it's really financial companies which, on a price earnings basis, look cheap. In other words, share price relative to profitability, and energy companies. A few others coming up there. Meta's coming up. It's taken one hell of a pounding as it is anyway, so I'm not surprised it's coming up. Doesn't mean it's necessarily going to do well. What has done well this past week? Well, move my face out of the way. You can see Microsoft, and I'll cover Microsoft and Oracle and Adobe. Pretty much everything, including energy companies. Well, OPEC Plus helped. Some of those have gone up 15% and so on. Where are we on a different measure of valuation, which is price earnings growth? Again, it's only energy, which on price earnings growth looks undervalued, and certainly the OPEC results have helped. So let's look at some of those price charts and see where we are on these. I'm going to make my face a tiny bit smaller to make things easier for you. That's the S&P 500. I need to draw stuff. I feel the need to scribble, okay, because there's a hell of a lot of stuff there. That's where we are at the moment. That's where we are, that arrow. Now, this downward channel is what I think is happening. And yeah, you could get something up to there. Doesn't mean it's going to go up. I think most likely we're probably going to just see something along here. But that channel is most definitely set downwards, and I'm afraid I still think that's the way. Partly because these monthly MACDs have a long way to go before they turn around. Like I said, doesn't mean in the interim you can't have a few days of things moving up, but the pressure is downwards. Let's look at that from a slightly different perspective of Apple, some of the bellwether stocks. And Apple has been, again, I've drawn a channel there, and you can see the lower end, and it has indeed bounced up off it, despite this MACD, the monthly one, going down. And some of the stochastics, which tend to be more reactive, are oversold, and that's why you probably will get something of that bounce. I suspect it'll do something like that. Worst case scenario, you end up with an 11% gain in a year. Best case, you end up with about a 34% in a year. Those are just estimates at the moment. Microsoft, another bellwether. Where are we on that one? Well, I've drawn where I think we'll be potentially going, I'm afraid, which would put it about 12% lower than where it is at the moment. Now, it's not to say it can't go up here, but more likely we're probably going to end up around there. How it gets to that final destination, I don't know. It'll be like a drunk spider. The prices, they'll be all over the shop, but I think the destination will be probably around there. Not because it's overvalued, not because all these analysts haven't said it's a buy, just simply that's the direction of the wind is blowing. Amazon, another bellwether. You can see where we are. We're over here. Gives me about 3 options. These are skewed off a bit. 2's supposed to be up here, 3's supposed to be a bit more up there, and 1's supposed to be up there. So probably ease a bit forward along there. Give you, I don't know, not much of a great return. But it could do well. Could give you 46% in a year. That's a wide gap, isn't it? Yeah, it is a wide gap. Just the nature of the markets. What about Meta? Well, that's where we are on that one. Yeah, if it goes to all-time highs in the next 1.5 years, you get 180% return. Is that likely? I won't bet on it today. Costco, as you know, it's one of the ones that I like. You can see where I've drawn the green trend line going upwards. That one. Where are we at the moment? Well, you can get about a 22% return if it stays along there. Okay, and it'll probably do that. PayPal, what a drop, hey? What a drop. Dropped about 77%. It's now started going back up. It's recouped some of it. And I'd say it'd give you a 42% return from its lows. Well, it's pretty much almost done that. Not within 2 years. It's done it within a few months. So we're pretty much at the 40% off the lows that we were looking at already. It's time probably for me to do another forecast, and I'll try and update that. And what you can see here is what's happened. Okay, you see the monthly MACD. Market can move up 40% before that even moves. But this weekly one here, that starts a lot sooner. If anything, it starts too soon because the market's still falling. And it's really that happy medium in between that we try and get. And you can see the stochastics are flattened and trying to rise up. The weekly ones did. And it's usually somewhere here-ish that things start turning around. And that's difficult to judge where that is, except by hindsight. Anyway, we can see where it is now. Now it'll be a case of me just watching that to see can we indeed probably go somewhere along here and get some really great returns in PayPal. I'll update that for next week. Johnson & Johnson, I've given you 3 options there. As you can see, it's very much constantly in the news. It's still keeping at that lower channel. So if that channel holds, despite this sharp fall in the MACD, then you're looking at anything between a 1% return to an 18% return in a year. So let's see what happens next week. Look, the energy stocks have had a massive boom. They've managed to hold on after all of that. So Katera is on track. The image speaks for itself. Okay, you can see Halliburton, after falling below that lower channel here and looking like, hey, that's it, end of story. It's now bounced back up again. Does that mean you get back in? If you're out, I'd wait. If you're already in, well, you're in, so you might as well just hold on and see what happens. But yeah, it looks like oil prices are going to keep going up, and that's why some of these stocks have these massive rebounds. So Marathon Oil is back on track all of a sudden, as is, well, Occidental. I never left anyway, but you can see with this, that's where we are with it. And Warren Buffett's got it, I've got it, and that's what we're expecting. We're expecting to get our 43% return from when we got in, Warren and I. Devon Energy, back on track, pretty much. So if you exited, you'd probably just stay out and say, well, we're out. Or you might get back in. If you're in, you'd definitely be relieved that it all seems back on track again. Marathon Petroleum, again, back on track. Look at that. You can see the direction I've printed. That's where we are. I've added Adobe, and you can see just the sharp falls on this. And I think I did a separate video on Adobe, just to explain why it's been falling. I mean, the company has been going up and up and up, and now all of a sudden, crash, crash, crash. And we'll wait to see what plays out with this. But I thought it'd be quite educational, just to show that. Eli Lilly, one of the best picks we've had. It's been doing rather well. Again, you can see the direction. Potential 40% in a year. Why not? As long as it stays within that channel. I don't see it breaking below it. And you might even decide, look, if it goes near the top end, you might say, you know what, Alpesh, I'll get out. Or you might say, I'll stay in even though I know it could drop back here because it might give me more later on. And that's what investing's about. It's about, well, do you take a bird in the hand now, knowing you might get a drop and fall out? Or you might say, well, actually, now I'll exit all of it here. And then when it drops back to the bottom of the channel, I'll get back in if it drops to the bottom of the channel. Anyway, that's where we are with Eli Lilly. Let's look at cable. So as you know from my posts, I've been buying sterling. That's where we are. I've drawn on charts what I expect to happen. It won't be a smooth journey. It'll probably drop back down again, then go up, and before it goes there. We're not quite bottomed out yet on sterling. Still a little bit to go, which is why you'll still get some falls in sterling against the US dollar. United Health Group, another great pick. Lots of people liking it, but this is where we are at the moment. Now, the big issue is that going to drag lower the monthly MACD and that fall off the cliff, or will it manage to stay up, as so many of the other stocks have, contrary to what I expected, stayed up? APA, another one similar to that story. I'm going to go into some more stuff. Don't forget the campaign for $1million.com. One of the things I wanted to show you is here. This is some data from Bank of America. What they're basically saying is the more years you hold on, the more your returns are explained by valuation of a company. In other words, its share price relative to its cash flow or its profits or its sales. Okay, if you're holding only for a year, valuation is only one of many factors. If you're willing to hold for 12 years, valuation is pretty much the only thing that matters. This is one of the reasons why Warren Buffett says hold stocks forever, because he picks just based on valuation. The problem with that is forever is a bloody long time. Secondly, companies can go rubbish and undervalued companies can quickly become overvalued. So there's no point holding those for 12 years. This is why we hold for 1 year and we don't just look at valuation, we look at other factors such as growth, dividend yields, all the other factors. This $32 trillion, which was wiped out from global stocks, one thing you should know is it wasn't just British companies, it wasn't just American, it's been global companies. On the hedge fund side, this from Bloomberg was very good. Trend following strategies, which is what we do on pipspredator.com, they're back in vogue. Why? Well, trends are working. What about this then? What's this? Well, the Financial Times says UK companies face new wave of takeovers. So I looked at the ones which in sterling terms, let alone dollar terms, have so far this year dropped. Out of the FTSE 350 have dropped the most. And as you can see, these are probably the ones which are the takeover targets. You might even narrow that down and say, well, which ones have the best ratings? By Alpesh, they'll be the ones like Genuit Group, which might be more likely, or a Hill & Smith Holdings, etc., etc. Just thought I'd share that with you. US declines 3 consecutive quarters. Look at that. That doesn't often happen. In fact, when did it happen? It certainly happened around 2008-9. But other than that, and during the financial crisis, the dot-com bubble bursting happened there as well. Okay, don't look for more patterns than already exist. For those who don't know what stagflation, you keep hearing these terms, inflation and deflation means, but you all know what inflation means. Stagflation is what we're worried about. Economic growth is down, inflation is up, and unemployment is up. That's the concern. I wonder if unemployment isn't actually going up, it's actually going down. Inflation is definitely going up. Economic growth is going down. So what the hell do you call it when it's this? I don't know. Inflatey, stagflatey, something. There isn't a name for it. Just another depiction of what happened with sterling. What a bomb. And here we are with our Alliance Resources. Now I'm showing some of these others just because if they're special situations or ones which I particularly like the look of. This has been based on, again, trend. You can see the steep incline, 160% would be the return. It's still high risk because everything in this market is high risk. Also wanted to show you this. Average real annual returns from US equities and other things based on the type of economy we've got. We've got stagflation. US equities tend not to do rather well, but guess what? Gold and commodities do. So I'll do some more focus on gold and commodities for you going forward as well, in case we get stagflation. S&P 500 dividend growth outpaces inflation. So what this is just showing is actually dividend alone from the S&P 500 stocks should give you the ability to outpace inflation. Although inflation at the rates they're at the moment, even the S&P 500 companies might find it difficult. I mentioned gold. Well, here's the DB gold double long ETN. So this is 2 times leverage. And what you can see, I've put a stop loss here. That's the symbol. And I've tried to project that forward, that if we do indeed with this inflationary environment get that, then you'd be looking at about a 52% return if it went to recent highs. No guarantees. That still needs to bottom out a bit. So we'll see what comes out of it. And Kimmo, the UK stock. According to the analyst, 41% to the upside. It's on my approved filtered list. It also, on a discount cash flow basis, is about 70% undervalued. So it came up with this. Again, high risk because it's the nature of the markets at the moment. You know, even ones with good credentials don't necessarily make obvious pickings. Thank you all very much.